We're here today again on a Friday, Financial Friday, and we have our special guest, as always, Mr. Sasha Savick with Felix Partners to talk to us about the financial tip of the day. Sasha is a well-renowned finance advisor in the tax space, and he's going to bring us some tips today. I think we're going to talk about trust today, Sasha.
Yeah, no, we are. It's always a hot topic. There's many hot topics in tax, Donald. Thank you for the pleasure of having me, and good morning, folks. Looking forward to enlightening you with some really cool content this morning.
Awesome. Now, I think, Sasha, let's just jump right into it. A lot of folks, they hear about trust and if they should set up a trustee company or they should set up a family trust and all of these things, and it's just confusing, but we all know that it's important, it's something important to have in managing your wealth and your finances and your family wealth and your business wealth. Tell us a little bit about the difference between a trustee company and a discretionary company, or discretionary trust and a unit trust. Just unravel that for us.
Yeah, no, absolutely. So Donald, with Felix Partners, we've had really good experience in helping people in that area, and we've been at it for 25 plus years in the tax and finance space. Our practice is now set up to really assist people to maximise their wealth, to create the optimal structure, use the best technology, and really make a difference to their bottom line, which is what everyone wants. Right. So, when we talk about trusts, there's many vehicles out there you can go and acquire. You can do it at an individual level, company level, but trusts seem to be preferred vehicle. So what they provide is things like tax efficiency. If we're using a trust, we know that we're going to be able to maximise that tax efficiency and potentially reduce the overall tax liability. The other really important part is the wealth accumulation. I think the previous experience that tells us that enabling us to create long-term wealth accumulation is generally by setting up effective structures, and trusts are definitely one of them. What they're also good at, Donald, estate planning and succession. So by having that structure in place, we're a lot clearer path in terms of how we plan ahead, within the family unit or otherwise. Flexibility of income distribution is another key point. Allows income beneficiaries potentially to be allocated in lower tax brackets, which be appealing to a lot of people. And then lastly, but not least important, is asset protection. When we use trusts, we have that option to really protect our assets in a way that's unique, as opposed to having an individual name or just a company name.
Awesome. Now, if you can just talk to us about the difference between a trust and a discretionary trust, and maybe a unit trust.
Yeah, no, absolutely. So, like anything, tax is quite complex. There's always lots of different options, and it's what people look at it and think, "Oh my God, just too hard for me, too hard basket. Go and talk to someone else." So, look, with fixed trusts, as they're called, they're fixed. So when we set up a fixed trust, what we generally are referring to is a trust that's been set up where you've got predetermined allocations. So we go into a setting where the group of us know what we want to do. We know what percentage allocations we want to distribute, and we go into a vehicle that does exactly that. If we're talking about discretionary trust, which is what most people opt for, say in family settings or other settings, we have a lot more flexibility to do that. So we can plan, and we know that capital can then be distributed how we want it to be distributed. And it's ideal for both wealth creation and asset protection.
And you guys can do that at Felix Partners. So I have a client, because I can't advise as a lawyer, I can't advise on financial matters. So that's why I reached out to Felix, because I've heard so many great things about you guys. So some of my clients, I can absolutely refer them to you to manage their trust needs.
No, too hard. Sorry, Donald. Joking. We can absolutely do that. It's it's each one of these things, I'd say it all probably sounds quite easy and logical now as we talk about it. I want this trust or that trust. You just pinpoint. So we do a bit of planning always. We sit down with you, discuss your needs. These are all tailored solutions. There's lots of quirks underneath all of these structures. And setting them up once we know what you actually want is quite easy. We can execute that quite efficiently. And, from our previous client experience, it really tells us that clients walk away happy. And then there's an ongoing sort of regulatory compliance that's employed to ensure that you stay above the law, to ensure that you get the maximum optimal outcomes over a period of time.
And Sasha, and I won't hold you because I know you're very busy. Now, and hopefully we'll see you next Friday and talk to us about some other financial matters. But as it relates to a trustee company, what's the purpose of a trustee company, and why should we set one up if we're in business?
Yeah, so basically the way trusts operate, trust is really where the assets are, but you need a company. It's almost the way I put it in layman's terms is you need a manager of that trust, and that's where the company comes in. So it's kind of easy for people to understand. So a company is sort of almost like a shelf entity, doesn't really do anything. It just manages the trust on behalf, complies, etc. But underneath that lies a structure. We spoke about the different types of structures: the unit distribution trust, the fixed trust, and the discretionary trust as being the entities that you could employ. It provides continuity. So that's what's really kind of the bottom of that argument, is that provides ongoing continuity from a compliance perspective. When you have a company attached to a trust, obviously it does provide that degree of professionalism. That's the way it portrays in the market. Administrative efficiency, it's quite efficient because you can obviously comply very easily with the ATO. And there are tax and regulatory benefits. So having the trust attached to a company ensures that we limit our liability, we don't get into any strife with the ATO, we can efficiently manage all the tax obligations, not forgetting that those are still there when we have a trust. So we simply can't set up a trust and then walk away, but we do need to actually have someone actually looking after that and ensuring we don't go into grey areas, don't want to fall in any pitfalls. And there are many as well. Like any other structure, there's benefits, there's pros and cons, but I think our sort of view on it is that it's quite a optimal structure to run, to park your assets in and build your wealth.
Awesome. And that's our Financial Friday tip of the day. Sasha, thank you very much for coming in today.
Great. Have me here, Donald, and thanks very much. Hope to see you guys soon again.
See you next Friday.